Something just happened behind closed doors that could change the future of gold faster than most people realize. A major bank quietly released a new gold price target, and the number they revealed is forcing serious investors to pay attention. This wasn't shouted on the news. It wasn't blasted across headlines. It was delivered carefully, almost quietly, to clients who understand exactly what it means. And when institutions speak quietly, it's often because the message is too important to ignore. Because big banks don't make bold price targets for no reason. They do it when they see something coming before everyone else does. Before we go deeper, take a second to like this video and subscribe to The Gray Ledger, because this channel exists to uncover the signals most people miss. And if you want to stay ahead of the financial curve, you need to hear what we're about to share. For years, gold has been moving in the background, slowly, patiently, almost silently. It hasn't needed attention because its strength doesn't come from hype. It comes from trust. And more importantly, from fear. Because gold tends to move the most when confidence in the system begins to crack. Not all at once, but slowly at first. Almost unnoticeable, until suddenly everyone sees it. What makes this moment different is not just the price. It's the timing of this new prediction. Because this major bank didn't release this target randomly. They released it while central banks around the world are making historic moves. It's moves that most people don't fully understand yet, but moves that could explain everything. Right now, central banks are buying gold at a pace we haven't seen in decades. Not hundreds of ounces, not thousands, but millions. Entire vaults are quietly being filled. Entire reserves are being shifted. They're not doing it for decoration, they're doing it for protection. Because gold has always been the ultimate financial insurance. Not against inflation alone, but against uncertainty itself. Uncertainty is rising. You can feel it in the economy. You can see it in the markets. You can hear it in the cautious tone of financial leaders. And now, you can see it in this new gold price target. Because when a major bank raises its expectations, it tells you one thing very clearly. They believe something bigger is coming. Something that hasn't fully happened yet, but is already beginning. And here's what makes this even more interesting. This bank isn't known for wild predictions. They are known for being conservative, careful, precise, and often early, which means when they adjust their outlook, it's not emotional, it's calculated. It's based on data most people never see, flows most people never track, and signals most people never recognize. Because the truth is, the biggest moves in gold don't start when the public buys. They start when institutions position themselves first, quietly, patiently, without attracting attention. And that's exactly what may be happening right now. To understand why this new target matters so much, you have to understand how gold moves during moments like this. Gold doesn't explode higher without a reason. It climbs when confidence in something else begins to fall. And lately, confidence has been facing pressure from multiple directions at once. Inflation may have slowed on paper, but the cost of living still feels heavy to millions of people. Interest rates remain high compared to just a few years ago. And debt levels have reached numbers that once seemed impossible. Governments are borrowing more, consumers are borrowing more, and even the financial system itself is carrying more weight than before. Weight that becomes harder to manage as time goes on. This is where gold begins to quietly step back into focus. Not as an investment alone, but as a signal. Signal that smart money is preparing for change. Because gold doesn't depend on promises. It doesn't depend on earnings reports. And it doesn't depend on policy decisions. It simply exists outside the system. And that's exactly why institutions trust it. What's fascinating is that this bank didn't just raise their gold price target slightly. They moved it to a level that suggests they see a meaningful shift ahead. Not a temporary spike, but a sustained move. A move that could unfold over months, maybe even years. And that kind of forecast doesn't come lightly, because banks understand the responsibility of their words. Their clients act on these signals, their clients move billions based on these expectations, which means this new target carries weight. But here's where things get even more interesting. At the same time this forecast was released, physical gold demand has been rising, not just from investors, but from nations. Countries that are quietly increasing their reserves, reducing their dependence on currencies, and increasing their dependence on something tangible. So currencies can be printed, but gold cannot. Currencies can be expanded endlessly, but gold remains limited, and that scarcity is what gives it power. You see, every financial system in history has relied on confidence. Confidence that paper holds value. Confidence that numbers on a screen represent something real. But when that confidence weakens, gold begins to strengthen. Not because gold changed, but because perception changed. Because people begin looking for stability. Stability is rare during uncertain times. This is why the timing of this bank's prediction feels so important. It reflects a shift in how the future is being viewed behind the scenes. Future where gold may play a larger role. Future where protection becomes more valuable than risk. And a future where those who prepared early may understand exactly why this target was raised. Because sometimes the most important financial signals don't arrive with noise. They arrive quietly, just like this one.